Hello traders and aimsters, this is Imi. As you probably know me, I am from iTradeAIMS.com. That's my blog. So, did you have a good weekend? I hope you did. I certainly did. Well, mostly stayed at home, did nothing. It was very cold. But sometimes it's alright to snuggle up with family, enjoy yourself. We had plenty of mince pies and stuff like that. Nothing specific on Black Friday. Did you enjoy your Black Friday? I hope you, if you are not one of the members, we had some really cool deals. Well, 50% off to join the AIMS membership area. But if not, well, what can I say? You missed out. A lot of people had some good fun on Black Friday sales, but you know, if you need something and you get it for cheaper, that's a lot of fun. Whereas if you become a victim of, well, not a victim, but if you fall prey, or if you fall for the beautiful offers the marketers have created for you, then good for you and good for them as well. If they can sell it to you and if you can buy it, that's what keeps the stuff running, right? That's what keeps the market going. Well, anyway, so Monday was a very nice Monday. This Monday is really nice. Decided not to trade on Friday, you know, because Thursday was a Thanksgiving and Friday was supposed to be rubbish, but it turned out to be all right because I think Ganesh traded on Friday. Let's actually just go there and see. So this is the London Open. Oh yeah, I'll trade here, but probably not because the box is too big. So this is not a trade. And hold on, what happened? Oh, okay, sell dot. Don't need that. So let's go to the Friday. Yeah, on Friday, then it kind of went on, and this would be where the cutoff period has happened, like after 10 o'clock UK. This is a really nice formation because, as you can see, these this, and this, they do translate into something. And then when this happens, you would have a double AIMS situation on the M5. Let me show you what a double AIMS is. Okay. So if I put a line here, this is the M5 line. And if we go to the M1, you see this is those three peaks. It was here, here, and here. So then when you had the setup one signal around here, you would have a double AIMS situation. So the M5 level would be here, whereas the M1 level would be here, and you would see this come in here so many times. So you can clearly say that if it broke around here, it probably will continue to go up, and it did. So it breaks here, and then this is that confirmation. This is the retest of there. It's a classic technical analysis base kind of thought process here, where a support resistance is broken, and then, you know, once it was a resistance, then it turns into a support. It's a very interesting thing to do it, but I wouldn't do it on price alone because there are so many other things you have to look at. It has to be part of a structure. So it helps me if I look at it and people would think, oh, is it me saying trade price action and stuff? That's not what I'm saying. We trade price all the time, whether you call it price action or not. It's always price. So price goes up, then goes sideways, and then creates this particular pattern where the boxes are all aligned. So you can call it to say, well, there was a quadruple top and then it was broken and then retested and stuff like that. But this creates that pattern with box and everything, and that's what we like. So the underlying structure here that we are following is the 345, the setup one, and that is why it gives it confidence. So there's that confluence to kind of add to it. And then, so if you follow this trade and you did not get out around here, you know, on the box, which I probably would have, then you probably had something over here. So really not much on Friday, but now let's go to today's price action. Today's trading. So this is London Open, breaks out. I love it. I love it when this happens. Like, this is what I'm waiting for. This is what I like. You need a breakout. Now, clearly this wasn't a low bot. Low bot is difficult to explain because it's something that I've done for a while. I know when not to trade and I know when to trade. That's why I don't really teach it. So it's like a stage 3 thing. Once you know what you're doing, you can do this. But anyway, if I did take a low bot, it would be a rent, but I didn't. I can't really explain why, because I need to see something, right? So you see here, this is where London Open was, right? Before this. It's just not an enticing situation for me. If it was here, if it was like this, and it was a setup 1, I would definitely have got short if this was London Open, but not here. But sometimes I would. But as you can see, instead of going down, it had gone up, right? So it would look like, why didn't you go short on low bot? Well, for low bot, you need to have price inside the box. I gave it away. And then right at London Open, it spikes down. So then I was thinking, okay, if it spikes further down, we'll see what happens. But in the next minute, it started going up, and that's it. I've forgotten about going short now. All I'm looking at now here is, okay, it's going up. Yeah, now it's going to pull back. But then guess what happened? It pulls back too much, right? It comes all the way down. Goes up, comes back, still all right. It's around red line. But I know I'm not going to get my hunt signal. But then I get it. Because the hunt signal is not really that important. It's the hunt pattern that we need to learn. The 4 rules of the hunt. So we have the peak up. So we have the peak up, peak down, you know, the new peak, the dark, the rules. And I don't want to say it clearly here, but they're there. Those 4 rules is what create, and those rules are coded into the hunt indicator. So, but it pays to understand the rules before you actually use the indicators, to understand it. So, because by the time the alert comes, and then if you were like, okay, I'm waiting for hunt signal and then I'm going to trade it, it's probably too late on M1. You could still work on the hourly and other charts. You don't have to look for the hunt pattern. You just wait for the hunt signal and then apply the 4 rules. But on M1, you need to know what are the situations where we start looking for the hunt signal. So those are the 4 rules. So new peak and then pull back. Thank you, Grant. He's the inventor of hunt rules. So we have the seed signal here, but guess what happens? It breaks below the seed and then it closed up. So technically, by the rules of the seed, you could still have taken a pending order, buy order here, and stop loss then below this candle. I didn't do that. I went long here because it was literally the same, right? Not much difference. So buy here, stop loss here, bang, it goes up, and that's where the chat room comes in. Okay, so let's talk about that. Yeah, so around here I appeared in the chat room. So around here I appeared in the chat room. All right, okay. So around here I appeared on the chat room. I said yay, which actually meant yay. Well, there was a yay here as well, but sometimes I don't go straight into the chat room myself. I wouldn't advise you to do that. I think it would be best if you come 10-15 minutes before the chat room, so kind of chat with each other. But personally, sometimes I will come before, but sometimes I don't. And the reason I don't want to come is that I don't want to get biased from anybody's opinion. I just want to make my own opinion. And then when I've made my opinion, then I go there, because then I'm in a better position to actually share my opinion. And if I have to teach, I teach. So comes up, and now I know I'm only looking for longs. So here, when you enter here and your stop loss is here, bang, it gets hit for 28 here. So I had my 14 stop loss, and I thought it was going to go down and hit, but you know, you have to let the market do its thing. Bang, it goes up 28, hits 2%. Now the game's not over. Because that's where I said yay. So it was a double yay. It was double yay because one, I hit my target point. And the next thing was, oh, I have a new peak. The market is still, you know, the night is young. It's only started, and that's what I look for. The market breaks out. Now I'm looking for a nice, lovely retrace. Comes down, comes down, comes down. Gives me a cherry. Pending order pops. Cherry's broken, pending order deleted. Actually, ATM deletes it on its own because it hit the stop loss. Thank you, Steve. And then we have another cherry. Oh, that's lovely. So then what happens? Cherry comes in. You put a pending order there. Stop loss here. Now I could have moved my pending order below on the seed, which could have massively increased the profits. I mean, these little few pips on M1 mean a lot. 2 pips can actually double your profit sometimes. So here, if I took this, my whole risk would be 5 points. And guess how much it went? Because I exited to there. So if I stayed here, this would be 6 times. 6 times return on investment. 600% in return on investment. So if I invested $100 on this seed and I exited there, my risk would be 5. My profit was 30. 6 times. Simple math. 5 into 6, 30. So if you risked 100, you made 600. If you risked 1,000, you made 6,000. What did I do? Let's go there. We'll go to those Bitcoin ones a little bit later. Right, so I got myself 400% return. How was that? It was because the risk was 7 and I got 28. See the difference? 2% changed just because of 2 points. This is huge. Understand this. So the seed gives me a signal where my risk is 5 and I make 30. So number wise it's not a big difference. Here the risk is 7 and the profit is 28. Not big difference. I still made 28 points. Whereas if I took the seed, I would have made 30 points. What's the big deal? The big deal is 2%. Because here, the 7 risk, I make 28. That's 7 into 4, 28. Simple math. 400% on return on investment. So if I invested $100, I made 400. Just a minute later. And the pending order 2 pips, only 2 points better. So I have the 1 point plus buffer. My stop loss, my stop loss will be 5 points. My lot size will be calculated. This is the power that we have. The power of variable lot sizes. You use this and this is where Hunt just crashes everything. Destroys everything. Because nothing comes near it in profitability. You do this. Follow the green line, black dot. By the time I exit it, it was 28 points. Well, here, sorry. If you enter there at the close. See, as soon as it closes, below the green, and you can code it, exits you for 30, you made 2% more just because of this. It doesn't really matter. Not a big deal. Okay, where is my picture? Here it is. Right? Entry here, exit there, slightly late. It's all right. 400% return on investment. What else do you want? Now, in forex terms and stuff, we always say I made 4% or stuff like that. But if you compare it to the stock traders, they always talk about 400% return. And this is true. Because on this initial investment, when you took the trade, that was your investment. And it returned 400%. It could have been 6%. Not to mention, if I added on here, then it would be all the different things. So here we go. You got 2%, 200% return on investment here. Then you got 400% return on investment here. So that's 600% already. But it doesn't end there. Right, so around here, and this is very interesting. I like it. So this is interesting because around here, the calls started coming. Oh, setup 1 is happening. This is, I know you're looking for a setup 1, but there's a few things that's happened here. This is a stage 3 comment, and you have to listen to the stage 3 comment. Don't do it, but listen to them and understand it. If you're on stage 1 and 2, yes, it is a setup 1. But this is how you learn, right? Which setup 1s are the best, which ones are not. So let's go to the chat room. Lovely seed that was. It was cherry I took. Actually, yes, I took cherry. Okay, let's come back to the setup 1 later because I want to talk about these other few things first before I forget. This is the pound Swizzy, and it went all the way here, but I don't know if I forgot to close it or did I leave it over the weekend. But as the week opened, it actually turned to a break-even trade. But this is very interesting. I want to talk about this. Yeah. So this is the Bitcoin setup 1 or setup 2 that we pointed. It is a setup. It's not strictly a setup 1 or setup 2. It's again a stage 3 kind of thing. Like I knew what I was doing and I knew where I would exit. So we have a 3 and a 4. I got in market order, stop loss somewhere down there. Luckily, didn't get hit. It was well enough, you know, far enough that it didn't get hit. Goes there, but look where look where the exit is. How was I able to predict it? How was I able to predict this level? And would you like to see the next picture? Like where did the price go? It's like, really? So it's 2-hour target, return on investment. If you invested 100, you got 200 back. Well, the question is this a made up thing? How was I able to get in and get out exactly at that price level? How did I know that the market's just going to stop there? That is the question. And the answer to that is the mechanism that we have in setup 1. The setup 1 not only gives you an entry signal, it also gives you a spot where you risk less than your potential profit. And that is the key to trading success. You have to know a setup that gives you 1 ratio 1.5 and above. So if you have a risk of $1, you should have a higher probability of making at least $1.50 or $2 most. We have $1 loss and $2 profit. That kind of thing. 1:2. And so I will later show, I think around here. First I will show, so I have 2 things to come back to. So the pound Swizzy went up. I did not take profit here. Ideally, I should have taken profits just before Friday was closing. Should have taken profit, but I didn't. So when the market opened, luckily it didn't gap too much. I just exited. I didn't exit. I mean, it just stop loss was taken out. Then this morning, I just dragged and dropped. So automatically exited. And so that's that call for our setup 1. We're going to come back to it in a bit. 400% return. And that's that Bitcoin chart. Check this. How was I able to do that? It's spot on. And that's the trick. You might find it in one of my YouTube videos where I think it's titled something, how to set target points with 80% success rate. And it is 100% true. You can learn to do that. We call it the target zone 1. Actually, it's one of the motto. We say work towards target zone 1. That's all you have to do. It's a fantastic thing. Okay, what's next? So that's the pound Swizzy. Next we're gonna come to, yes, next I want to talk about, there was a question by Eric, whether you should trade the Japanese 225 or the Nikkei or something, whatever it's called, pronounced. So he wants to trade it on M1, but there's a problem. Not every market can be traded on M1. You need to know the criteria to check if a market can be traded. And the easiest way to do it is to, when you go to the M1 chart, check these 2 lines. If you're using the setup 1 pattern, you would see the bid and ask lines like this. If they are far apart from each other like this, if they are taking real estate, so if you think about this, if this is the area, this much is what, this is how much the spread is taking, right? This is how much the spread is taking. It shouldn't be taking this much. If this is the whole area you're playing with, you know, price wise, it should be around here like this, not this much. So if you look at the DAX chart, look where the lines are. See, the bid and ask are too close. So here, if we give the example, this is the area you're playing with, compared to that, your spread is just a line. So proportionally, you have a lot of vertical space to play with. You see, time is constant. The space of time is the same, but the space of the price can squeeze, right? It can squeeze and become thinner. So when we say market is thin, that means there is little difference between on the vertical axis. So then the spread will increase. Thinner markets will always have bigger spread, and it's different on every time frame. So the DAX is very dense market. Dense. The density is here on the x-axis, on the y-axis here. It's thick, and that's why you have the spread getting very, very narrow as well. So if you were to look at the DAX of M5 or something, you won't see bid and ask. It will be just a line. It's at yesterday's level. Let's go to that level. See that same level that we talked about? I talk against support and resistance because I have a grudge with it. I have some thinking about it. But it is true that there are ways to use it. But the ordinary trader cannot do that. And they say use it on a naked chart. And that's where all the problem becomes, because on a naked chart you have to do a lot of drawings. And then the drawings can disappear, and then you have to draw them again, and you will forget and all that. But whereas if you have the box and the indicators and this, they are permanent, they are grounded, they're there. Once they're drawn, they're drawn. So if you had drawn this yesterday, if you had drawn your support resistance line which you identified yesterday based on this, it was useful to you today. But without it, it wasn't. So everything needs a different kind of discipline. Anyway, if you did, what did it help you with? I don't know what. Because if you're trading with patterns, you just be following the patterns. But if you were like going into the nitty-gritty of it, okay, that was a bit of a spoiler, but anyway, let's come back to the setup one now. So that was the spread issue, Eric. So you can easily find which one. If your spread was like 1 and the market was moving 100, 150. So that's another criteria, by the way. One is that visual, and the other one is you need to have a market that moves at least 100 to 150 points during a session or a day. Does that index or does that market do that? And then is spread less than 2? If not, move on. So here the calls were, is this setup 1? Is setup 1? Well, it is a setup 1, but would I take it? No, I wouldn't take it. Why wouldn't I take it? Again, it's a stage 3 thing. So I drew this, push up, push down. Now, since this is a breakout from a sideways market, this most probably is your 1-2, right? But if this market stayed here and did not go above this, if this didn't happen, then this would have become a 3 and 4, which would be small, right? But in this occasion, it did that, come back. When this spike happened, this peak went above that one. So then this was a 3. We are still continuing. I thought this is most probably a 3 of a 3. See, this is the stage 3 thinking, because you've seen enough charts. You've seen thousands of these patterns develop in front of you. So you can do that. So I have this, all right, I'm going to look for a hunt, because if this is 3, then probably 5 is coming. And perfectly, 5s usually are 45 degrees. The 5s don't go like this. 5 don't go up straight like this. 3s would go. Wave C would go up, down. 5s usually go like this or like this. Sometimes they're too boring, go sideways. Gets you out without profit. If they kind of go too far up like this, most probably they're a new 3. And as you can see, very parallel with the gator. Comes here. In my mind, I'm doing the count 1, 2, 3, 4, 5. And then based on that, I thought, well, if this is the 3, and inside the 3 we have 1, 2, 3, 4, 5, then we have ABC coming. So that was the call in chat to say, you know, ABC is coming. So that probably will be the Scooby pattern and the PC pattern on the M5, which would work like this. So now focus on this area. This is where that M1 was happening. At this seed, we were saying, oh, setup 1 is happening, setup 1 is happening. But then I said, yes, technically it is setup 1, but quick check. Where is the position of your setup 1 within the M5 wave? Peak of wave 3, mid of wave, start of wave, what is it? Peak of wave 3, Jasmine said, you know. And I said, these are not stage 1 and 2 consideration. In stage 1 and 2, you look at the trade, you follow the flow chart, you take the trade, that's it. So Jasmine understood, yeah, so that means a reset might happen. Yes, although there's a seed on M5. So, and then I asked, can you count the push and pull? You know, the push and pull, that's what Elliott wave is. Push, pull, push again. You see that on M5? Like we saw on the picture I did. You can see it. I think I drew it here as well. The M5, yeah, here. So on the M5, you can see it. Push, pull, push again. Then it pulled again. Another push. It's enough for me. Now ABC then happened. This is a chance of PC, I said. I don't know if PC happened. I don't think it happened because the market decided to just turn around. So what happened there? So this is where the setup 1 was happening on M1. And I've seen push, pull, push, pull, push, right? I have a strong peak of AO here. I'm not interested. I want the market to, you know, do something like this. I want the market to kind of go sideways like this. So this will bring the AO around here back to the. So we need a full-blown wave 4 to happen, and then wave 4 to break into wave 5 on the M5, and then we'll trade M1. So, but you don't get stuck with this. You see, don't define your trading based on this. This is the scenario for that time. If the market changes like it did, you do what it does. And this is the beauty of understanding the hunt pattern. So once you do your setup 1, batch 2, you know, stage 1, stage 2, actually in stage 2 you start doing hunt. You start looking for these situations, right? You want this. So here, check this. That's the first thing where the market shows itself. It shows its hand, right? Like it's going up and down, kind of trying to do wave 5. Guess where it hits? The peak of wave 3, right? And then, can you see the change of character of these candles? Don't these two candles look very different to these candles? They are bigger. They have more density in them. Comes down, pulls back up. Gator sleeps, clearly indicating to you this is some sort of 1-2 happening here. And normally it happens around cross of zero line. That's why the fresh cross of zero line was our jingle. And then, bang, it breaks out. When it breaks out, you think, oh, I've missed it. Not if you have a hunt methodology. Now, I did a stage 3 or stage 4 type of trade here because here you have the hunt pattern, the peak and the pullback, but you don't have the hunt signal. But I don't need a hunt signal at times because I have a confirmation. And as soon as this red bar confirmation gets in, I get in with 1%. Price goes and hits my target point. Bang. I was thinking of removing my target point and then trail it. I didn't get time. It just went straight because I was trying to take a video. I started thinking, well, let's make a video. It would be nice if I make a video and, you know, on video it hits the target point. And then by the time the video started, you know, those 1, 2, 3, when it starts, bang, it hit it. But if I was paying attention instead of trying to show off and make video, I could have, and I usually do that. I was like, it's going strong. Let's get rid of the target point and trail the candles. If I did that, then you had 44 or 45 points. So let's say I have a 9-point risk and I make 45. 500%. Simple math, 9 to 5, 45. So we've already made, technically, potentially we made 2 here. Let's call it 4. We already did 4. So I did 2 here, 4 here. That's 6. Let's suppose you took this setup 1. I didn't. This wasn't setup 1. Ganesh took it, so I'll say I took it. 1% down. No problem. I'm still back to 5. Bang, another 2. I'm sitting at 8% today. 3 trades, 8%, easy. And if I converted this, it's going to be 13%. Now, one more thing. Now, I did the impatient thing or a clever thing to say, oh, I went in early using this. But if I waited for this seed, look at the size of this seed. This would be 5 stop loss. And if I trail the candles and I got out here, this, my friend, is an 800%. 8 times the outcome. Because 5 is the stop loss, 40 points profit. Simple math, 5 into 8, 40. It's amazing. So, what can I say? You be the judge. And you can back test this. And actually, I have this amazing offer for you guys, which I'm trying to get. I love Forex Tester, and I want to make a video on that because I've got something juicy for you on that. But anyway, more on that later. This was supposed to be a 15 minutes video. But anyway, here we go.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.